Research and development. Now, research and development is a very, very hot topic at the moment. I'll show you some stats in a minute which will prove that point to you, but it's a very, very valuable tax credit, and it's been going since 2000, but it's only in recent years, say from about 2011, that people have actually been getting the benefit from it. HMRC have got a very relaxed attitude to R&D tax credits at the moment. People say to me, how long will that last? And my attitude is, well, it doesn't matter how long HMRC have a relaxed attitude, because if you're doing R&D, you're doing R&D. So you should be able to qualify for it regardless. You shouldn't be worrying about what HMRC's attitude is. And what I would say as well is that it's a government scheme. It's not a HMRC scheme. The government want to show that the UK are innovative, which we are. But in order to be able to do that and show the rest of the world, they need statistics. And so that's what they're getting from the R&D claims that are being put in by companies. So each year HMRC issue their stats. So in August, just gone, they issued the latest stats, and this is what they showed. So in 2012-13, 15,120 companies put in an R&D claim. That compares to 1,780 when it first began in 2000. So it's increased drastically. And just to sort of illustrate the point of how it's actually been growing since 2011, if we go back 1 year to 11 and 12, it grew from 11 and 12 to 12-13 by 25%, and it's on the increase as well. Since its inception in 2000 to 2013, the taxpayer has got £9.5 billion relief in R&D tax credits. In my opinion, every company does R&D tax credits, they just don't realise it. And they're just not tapping into what they are already spending and claiming the relief on their corporation tax return. I'm the R&D tax specialist partner here, so once we've been through this session, at the end if you want to come and talk to me, I know people around the room, some of you are actually already benefiting from R&D, but it's very much worth thinking about it because of the relief you get. And it's actually the London and the South East, companies in the London and the South East that are benefiting most throughout the country. So, most people think to get R&D relief, you've got to be a pharmaceutical company, you've got to be in a lab, you've got to have a white coat. Absolutely not. Many different industries that I've put up there are qualifying for R&D. And just to, as I said, I think the default position is you are claiming it. And if you are sitting there thinking, right, I need to take my company forward, and to do that I need to better the service I provide, I need to make it more efficient, I need to improve the product I'm making, then you are probably actually doing R&D already. Just to give you some examples of some R&D claims that I have done that you might think are perhaps nowhere near R&D. I've got a client that makes cake mixes. And they've been claiming R&D. They have to reduce their salt intake, they have to reduce their sodium intake because they're required by law to do so. As soon as they change that ingredient, it changes the product. It changes the way that when you bake it, that it raises. And so they've had to do research to find out exactly what they can do to change another ingredient that it still tastes the same, still looks the same, and still will be able to be baked in the right way. They've also done things, for example, when they're making scones, in the way that all manufacturers can therefore bake this scone so that it'll work in all of their machines across the board. And again, they're just taking it that little bit step further. I've got things like people that make gammons. They change their gammon from an oval shape to a circular shape, and that's qualified for R&D. People that make fences, temporary fences, they've qualified for R&D. So it doesn't have to be computer software, and it doesn't have to be pharmaceutical companies. I think pretty much every company is doing it. So, what is R&D? Well, HMRC have to define what HMRC is, and their definition is quite complicated and quite wide, but it has to be, because it has to cover every single industry. So they say it's a project which seeks to achieve and advance in science or technology. But as I say, if you are sitting there with a problem and you need a solution, you can't just go out and buy something that will solve your problem, and you go out, test and do something. You are doing R&D. If you are increasing the shelf life of something, for example, or building your own internal software that does something for you that no other product supplier can do, you are doing R&D. And a really pivotal point to all this is when you're doing your testing, even if it isn't successful, you can still claim the R&D relief because you're still trying to overcome that uncertainty. So how does the actual tax credit work? Well, you get what's called this 225% super deduction. So for example, if you spend £100,000 on qualifying R&D expenditure, and I'll tell you what that is in a moment, they will give you another £125,000 deduction in your profit and loss account. So you've now got, instead of got £100,000 going as a deduction against your profit and loss account for corporation tax purposes, they will give you £225,000 deduction for corporation tax purposes. To put that into monetary terms, if you're paying at the small company's rate of 20% corporation tax, you will have a tax saving of £25,000. And actually it's quite easy to get up to that £100,000 because what qualifying costs can you have? The easiest one is people's time. So anybody that is directly involved in that R&D. So if they weren't there, it couldn't be done. So you'll have the person that is perhaps actually overseeing the whole project. You'll have the people that are doing the testing. You'll have the owners, the directors, the FD will be involved. There'll be meetings going on to discuss all of the R&D project. And an element of their time can be claimed as part of the costs of R&D. So you get their gross salary, a percentage of it is applicable to the amount of time they've spent on the R&D. You get the employer's national insurance on that. You get any pension contributions on that. Any expenses that they've incurred that directly relate to that R&D. So if they've had to, go in a car and go somewhere to a seminar, for example, to learn about something that will obviously enhance the R&D that they're doing, you can claim those expenses. You can claim that mileage. That all counts. If you are actually, I gave that example earlier of the cake maker, they obviously have to buy ingredients and keep testing it. Those consumable products that you've bought, that you've used in your testing, they can go towards those costs. If you've had to use a subcontractor to help you because they're a specialist in that area or they've done additional testing for you, you can count their costs as well. If you've got just a testing centre or where the person that does R&D has got his own office, for example, in the building, you can claim by floor space, basically, an element of rent, an element of rates, an element of heat, an element of light. That can all go towards your cost. It's quite unbelievable what you can actually put in there, and you end up obviously getting quite easily up to the £100,000 alone just on that. There are two other types of reliefs you can get under R&D, and what sometimes happens is when you take that 225% super deduction, you might end up with a corporation tax loss as opposed to a smaller liability to actually pay. And what you can actually do is say, well, I want to get some tax credits, I want to get some cash back on those losses. And the rate used to be 11% of the surrenderable loss, and they've increased it from April 14 up to 14.5%. In practice, I've never actually seen anybody make that claim. What they normally do is just carry that loss forward against profits chargeable to corporation tax in the next year and reduce the bill that way. But what you can also get is you can get research and development capital allowances. So on your tax computation, if you've got any sort of fixed asset, plant, things like that, anything that directly relates to the R&D activity you're doing. So if you bought a machine or of a testing type, or a computer, a laptop that is used by the person that does the R&D, you can claim capital allowances at 100% on your tax computation. And in the right circumstances, you can actually claim it for company cars as well. If that person does literally nothing else other than R&D, you will be able to claim it, again, at 100%. So a really lucrative relief there under R&D. And of all the R&Ds we've done here, none have been rejected. One has been queried. We gave them the answers, and they didn't have any further issues. And they're paying out really quickly. They're turning them around in sort of 2-3 weeks, actually, and issuing the refund. They're very hot on this at the moment. They're not hot on a lot of things, but this thing they actually happen to be quite hot on. So definitely worth thinking about. If you think you might have R&D and you haven't thought about it before, please do come and have a chat with me. And what the real beauty of it is you can actually go back 2 years. So if, for example, your year end was 31st of December 14, you could go back and make a claim for 31st of December 12 and 31st of December 13, as long as you've got that claim in by the 31st of December 14. Okay, so you could technically do 3 years all in one go. As I said, you claim it on the corporation tax return, but you do need to do an R&D report, and that's where we obviously come in. It needs to have a narrative part and a numbers part, and the narrative part shows HMRC that you've answered the specific questions against the legislation to show that you're doing the R&D, and they just need to see it written in a specific way, and that's what we've got experience of doing.